All right, guys and gals, this is Blake Morrow. You are listening to the Morning Edge webinar. Hope everybody's having a great trading session and happy pre-FOMC day. So we were just in the chat rooms talking about bonds, and let's just pull up the charts really quick. Okay, all right. So let's actually look at the bond market. Let's take a look at the 10-year. This is obviously a delay, but it's not a big deal. Not the yield, but the actual bond market is. I don't subscribe to the feeds. I didn't even do that when I was trading for Gallows Capital either. It's like, why? I don't trade the bond market, but I do watch it, and having the live feed of yields is probably more important, or I've always felt is more important anyway. But looking at the bond market, obviously we are at pretty important support levels, right? This is the 127% extension. We're oversold. We continue to be oversold. Divergent relative strength below the breakout point here, and trading heavy. Part of you probably feels, oh man, we're going to be bouncing soon, which I don't disagree with you. The other part of you is probably thinking, we're actually in breakdown territory. This should continue lower. I don't disagree with you either there. If you're thinking either one of those two scenarios. What I am thinking though at this moment is the DSI, the Daily Sentiment Index. We were just talking about that in the chat room, so let me go ahead and pull that up for you guys. And I do mention this from time to time when we're on air, and I share with this. I try to share it every day when I'm if there's something interesting in DSI that needs to be shared. No, this one's from yesterday. I want you guys to look here. You can see where it says bonds. Okay. Bonds are at and notes. They're 30-year, 10-year. You can see they're in their teens. It's extreme, but it's not super extreme. Super extreme is when you get below 10. So the point I'm trying to make here is, even though they are low, they're not like super extreme. Like we could end up, and I want to show you this chart, and then I'm going to zoom and do this a little bit. We could go lower from here. If the Fed chairman sounds a little hawkish, yet is not worried about yields at this point, bonds could trade down to the 161% extension, especially given that we're below the breakout point. And you could see relative strength spike a little lower before we see a bounce. That is entirely possible, especially with DSIs only in the teens. We can drop to 10, 11, 12, 8, even 7. It's entirely possible. That's why I see it being oversold, but that doesn't mean we can't be oversolder, more oversolderness, right? So, that's why also, if yields continue to rally, you have to be really careful with currencies like the dollar yen. The dollar yen's up against resistance. It's big resistance, okay? But I also have to point out is if, we break out, I wouldn't be surprised if we see 110, maybe even higher. Obviously, the yen would be, torn. The yen would be torn between, yields going higher, but equities at the same time would probably be moving lower. So, who's going to win out? I'm not 100% sure. But I will tell you that, you got to be a little careful with these yen pairs. And that's coming from somebody who's short euro yen, right? Look, if yields continue to rally, I've got to assume that the euro yen might actually follow suit. So I'm just thinking about everything that's happening here. Okay. All right. So let's go through the charts. Let's figure out what we're looking for today. And and let's not ignore the fact that the NASDAQ and even the S&P are weaker. The Dow's a little stronger right now. And that is really a reflection of higher yields. So, okay. All right. So let's go to the euro. So here's the euro dollar. Oh, shoot. I did not mean to move that. Dang it. I hate it when I do that. Let me go to a weekly chart. I just totally screwed that up. Hold on. I didn't screw it up. I mean, I just moved everything and I didn't really want it to be moved like that. Okay. The reason why that chart's important, this is a weekly chart of the euro, because I really want to see how far the euro will dip. And in my opinion, the euro is very bullish. It may not be at this very moment in time, but overall it's very bullish. I actually am and want to be a buyer of the euro somewhere around the 117 level or maybe 115. And for me to give you a number like that, you're like 115 or 117, that's a 200 pip difference between the two. Yeah, because I can't make the determination where I want to be long the euro at this moment, because it would actually have to go hand in hand with something else, like what's happening with equities, what's happening with gold, what's happening with Bitcoin, for crying out loud, what's happening in that environment to trigger a buy at 117 or 115. The best way for me to explain this to you probably is that either one of those two targets are still valid, in my opinion, because if you take this bear flag pattern, the longest, the one that we're looking at and trying to play out right now, that takes us down to 116. The smaller bull bear flag pattern actually takes us to 117. So, the first stop I would think would be 117, and then we're going to have to assess what's happening at that point. But as you know, the 200-day moving average is basically at these trend lows. That's going to be really important. I don't think it's going to matter today. Maybe it does. Maybe we do get down there today, but I doubt it. I actually doubt we get all the way down there. But we will have to note those areas. So let's first of all acknowledge the fact that yesterday's 618 retracement held. Okay. We wrote down support as 118.90. And we put an asterisk next to it. And by golly, we've hit it a couple of times. I'm not going to write down that as support today because we're too close to it. Support right now is probably the 78% retracement, which is a spike low here, which comes in at 118.60. Let's just call it 118.70. I think that's going to be important support today because we could spike down there post FOMC, right? Resistance, my opinion, is still 120. And frankly, while we're below one, you know what? Hold on. I'm going to write down 119.50, then 120. No, what the reason why 119.50? That's the spike high right here. You see it? Okay. This is one of the only. This one's bearish, right? Cable. Cable's easy to me, and I know you guys know what I'm going to say here, so I don't have to really say it. Well, I mean, explain it a whole lot. 140.15, right? And support being right here at 138. Obviously, key support is going to be 137.50, but it's the same stuff we've been writing. and it's in a range. And I'm going to put that as an asterisk, and that's it. We're going to move along. And notice in the cable, we're like right mid-range. There's like zero anything to do right now. Nothing. I mean, you could even argue that it's bullish while it's above 137.50. Okay. Aussie, we are obviously holding 77 cents. A break below 77 cents puts 76.15 in play, or 76.76. I'll put 20. This is key for today. And resistance is still 78 cents. I mean, it still is. Oh, that reminds me. Well, really quick. Active orders. Give me a second, guys. I need to cancel this. Remove. Okay. Sorry. I had to remove the Aussie order. I've had it out there for like the last couple of days, trying to get short the Aussie dollar up here at 78 cents. I didn't want to leave it out there, and during the FOMC, and I'm busy dealing with other with the market moving, and all of a sudden I get spiked up, and then it goes through and I'm not watching. Next thing you know, I get triggered into a trade, and I'm not even watching it as it takes me out. So I'm just I just took that order off my board. Kiwi. So bear flag's trying to play out. Spike low here from a couple of days ago is important now. 71.50, then obviously 71 cents. Nothing's really changing here. 71 is mega support. 71.50 will be intraday support, and then resistance, I bet you, is 72.40, right? There, the 38% retracement. Okay. Dollar CAD. So, oh, by the way, if you're following along with the pips, we've sent out a bell notification. The way I put in a pip overnight is if the dollar Canadian reached 124. I have orders out too, and to buy dollar Canadian down there. And I'm like, hey, how come we had a pip? We had a pattern in play, show up today. And what happened is there's a error in our admin. Well, it wasn't an error. It was actually a human error that triggered the pattern in play accidentally. And so we had to remove it. We had to actually physically go into the database to remove it. So that's what happened. Because I am actually bullish the dollar Canadian if we can reach 124. The problem is I don't know if we're going to get there. If we get above 125.20, you have to realize that could squeeze. So 125.20, that's important. We have to be bearish right now because it is trading heavy. And I think we need to probably just keep it with a bearish designation until we get above this trend line, if we're going to do it, right? So actually you could probably do this. That's going to be a big key resistance zone right through here, right? So really we have to get above 126.10 at this point for it to turn bullish. Dollar Swiss. Now, this is an example of a very strong bull flag pattern right now. As long as we're above 92, the risk is that we break towards 93.75. Resistance will be 93.20. So 93.20, 93.75. And if yields rally, it's bullish. This is key support down here at 92 cents. I mean, this is if yields continue to press higher and you're like, oh, I just can't buy the dollar yen. Well, I mean, look where the dollar Swiss has been and look where we can go. I mean, you know, and you look at like longer term for the dollar Swiss, I mean, it's got a lot of work to do, really. Anybody who's short dollars probably looks at that chart and goes, ooh, you know what I mean? Like longer term, you probably look at that chart and go, yee, yikes. Okay, US dollar, Norwegian krona. I've built the case for why I'm bullish this. So, you know, I don't need to, I said it yesterday. I just didn't need to beat a dead horse. If you're in the chat room and you know, let's go to file list. Let's go yesterday. You know, again, the Wyckoff accumulation. I don't have to like beat it up here. The only thing I want to point out is with this US dollar, Norwegian krona, resistance, making sure that we break through resistance is going to be key, right? So today, that resistance will be at 854. Okay, I'm going to write down a couple areas here. 854, then 870. Okay. It is in range. Support is down here, 840, and then 835. So just in case we make a dip down there. Okay. Man, it's cold here this morning. You won't hear me say that. That's probably the last time you're going to hear me say that for the next 6 months, that it's cold here. It is actually cold this morning, but I think this is our last cold spell before we start going into the 80s and 90s where I live. Just as sad as that is, it's almost over. All right, dollar MEX. So we held the 618 retracement, which is 2054, 2055. Resistance is at 2105. And we're in a range. And frankly, we have to break above this to make me believe that we're not going to do a head and shoulder pattern. Okay. And I'm long, guys. I actually think we're going higher, but I'm just, just because I'm long doesn't mean my bias has to be, my analysis has to be biased, right? I think this is a head and shoulder building. I think it's important that we held the 618 retracement yesterday, right? So, we have to get above 2105 for me to go, all right, out of the woods here. We're going a lot higher. Dollar yen. Okay. So speaking of something that's really bullish with yields, yeah, I mean, we break above, what's the spike high here? 109.36. Support right now is 108.20. Actually right here, 108.30. It's bullish. Dollar index. Why? 92. I mean, how strong is that? After 92 is 92.50. You guys already know that. Nothing's changing here. 92 intraday, 92.50. We break that, both flag patterns on. Support is 91.40. That's key for the bulls to hold, right? It's because it's the bull flag pattern. I actually have to flip this to bullish right now. I know it's hard for me to do while we're ahead of the FOMC, but let's just, I mean, take a step back and just, you know, think about what's happening here. We rallied off the lows, we made higher lows, and the pullback's been very minor and shallow, right? Okay. S&P, so we're coming down a little bit, and you know, obviously $39.80 is now resistance support. Be right here. At 39. $39.10. I think is what we wrote down yesterday too. Let me check. Oops. Hold on. 39.10. 39.80. Then obviously 4,000. What did we write down yesterday? 39.15. Okay. I'm writing down 39.10 because of the spike low right here. Christian, test works. Test. Christian, you there? Test. Okay. All right. Your test works. I can see you. You know, my oldest son's name's Christian. Did I ever tell you that? Yeah. You know what his brother's name is?
I do. Pick me.
What's my youngest name? Roman. That's right.
Yeah.
That's because the Christians and Romans have fought for how many years?
Don't know, but too many.
I know. It's continuing in our household, so we just figured it was going to be the case. So anyway, all right. So let me finish up here. Still, I'm almost wrapped up. And I'd love to hear your thoughts on everything. But let me just wrap up with here's silver. Same thing as we've been saying. You know, 25, basically 25 and 27. You know, you could give it a little bit a wiggle below 27. We might find some resistance, and you know, just below 25, we might find some support. But roughly, it's 25, 27. And we're in a range. And gold, very similar. I still believe while we're below 1760, you got to remain bearish. Support is going to be at 1700, and then obviously 16. I have to write down both today, even though I don't think I did yesterday, because 1700 and 1760. The reason why is because I didn't think we'd even get there. But considering today is Fed day, there is a good chance that we can get there if, you know, volatility picks up. So this is bearish while we're below 1760. And last but not least is Bitcoin, 52,000. I don't even have to look. You guys all know. I know these numbers like, you know, back of my hand. It's bullish while we're above 52,000. And if we drop below 52,500 or 52,000, whatever, it is bearish. So then we're going to flip from bullish to bearish instantaneously, you know, right through the support. Okay. All right. So your bias chart is finished. And I want to thank you guys all for tuning in with me. Stelios and Steve are here. So Stel, how do you feel about today? What do you feel about the Fed today?
Well, as I said before on Face, I find very little motivation for Powell and his buddies to change their rhetoric and say something materially different. It seems that a lot of people are looking at what the dot plot's going to look like. And yes, we're currently pricing, I think, 2 rate hikes by end of 2023 or something like that. That comes forward a little bit or goes backward a little bit. Does it change anything? Yeah, in the short term it will, but really we're quite a distance away from any tightening, I think, unfortunately. So I'd love to say that there's going to be a big reaction and all that, but I don't see the motivation for them to do anything. So
yeah, I agree. I don't see it either. I mean, but I guess the question is, can they continue to deny? That's
the point.
I mean, I think that's where the most people are at. Most people probably feel like the way that we feel. Hey, you know, how is it that you know, how is it that the Fed is going to, you know, they're not going to really, you know, it's too early for them to move. They're not, there's no motivation for them to do anything. But will they even acknowledge the fact?
Yeah.
Yeah. And that's one step too far for the market, in my opinion.
Yeah.
If they do.
Yeah,
right?
I mean, we do have rising yields and slowly rising inflation, but it's very slow and it's really not anything significant yet. So they can afford to kind of pretend it's not happening for now. But you are absolutely right. At some point, they have to acknowledge it and say something. And that's what the market's waiting for.
Right. Yeah, so let's see if they do. I wonder if Steve is here yet, and Steve's got something to say. Oh, sorry, I got to stretch. Oh my gosh, it was one of those nights where I got up when I got up, and I was like, man, I could have slept another couple hours today. I don't know. Anyway, Steve, you here?
Yeah, I'm here.
Hey, what's happening, Steve? How do you feel about the Fed today? What do you think the Fed's going to do here?
They'll try not to do anything. The question is if the market is going to be satisfied with that.
Yeah. Well, so expectations are the Fed's not going to do anything. They're not going to change their rhetoric. Dot plots may shift. And if they do, that the market's really going to take notice of that. But, you know, have we gotten to a point where things have gotten too far and the market's going to react regardless? And that's kind of like the question I'm asking at this point is, does the market respond regardless of what's happening?
It is a good question.
Yeah. So anyway, well, I'm going to let you take over the charts and let you go over things that you want to go over here. But I think for the most part, I just want to mention two things. Okay. The one currency that's on my radar right now a lot is the US dollar Norwegian krona, just because, again, we've pointed it out time and time again, the dynamic of this currency has defied logic by the pair's not gone down as stocks have been going higher the whole 2021. And as crude oil in 2021, let's just look at 2021 just as a whole. I mean, we've gone from $50 a barrel to the high 60s. So, I mean, from a percentage standpoint, I mean, you think about that, you know, roughly it's up 40% since the beginning of 2001. So if crude's up 40%, stocks are up ridiculous amounts, and the US dollar Norwegian krona hasn't gone anywhere, that's saying something, right? So I'm going to be watching the US dollar Norwegian krona very carefully. And also I want to watch Bitcoin because, as I've reiterated a bunch the last couple of days, this is the riskiest asset you could buy. And I was trying to be politically correct by not saying I don't want to debate whether, you know, Bitcoin is going to 1 million or 0. You guys can. I'm trying not to. I say politically correct. I'm trying not to offend anybody because I know there are such strong emotions tied to Bitcoin, whether you're long or you're not, or you own it or you don't, or your opinion of it, you know. But I do think it is regarded as the riskiest asset you could be buying in the market. So from a sentiment perspective, so therefore I'm watching it very carefully today.
You just said everything that needs to be said.
Okay.
By acknowledging that it's a very sentimental market.
Yep.
Which it's driven by sentiment. It's not very hard to realize how easy it is to be completely mispriced.
Yeah, exactly. So, so anyway, it's funny. I tweeted something about, I tweeted about Bitcoin over the weekend, and somebody, I don't know who, it could be somebody who's listening in here at this moment, said, Bitcoin 125,000 by the end of 2021. Screenshot this. That was actually at the high, like literally at the high. Like I think it could have been within like 100 points of the high of Bitcoin. but that's a good example of people that
what I find more funny about these type of comments is I really want to have a person explain to me the methodology from which they derive price targets. That's the only thing I want.
Yeah, no one.
I mean, it might be why? How much did you say? 100 and?
Yeah,
25. You said
125,000.
Okay. Why not 110? Why not 140? I just want to know. I mean, if they can even remotely make the case that there is a methodology from which they can derive that price, I'm gonna be fine. Yeah, whatever. But it's like throwing darts in the dark. You know what I mean?
Yeah, I know. It's funny. I mean, it's not funny, but it is. It's I don't think anybody here could really argue why or how they come up with a target. I've seen banks try. There's I've seen banks try. I passed along a piece of research from Bank of America. So you guys, here. I'll pull it up. Damn, my dogs are starting to. I got to go here in a second. This is from Bank of America, and it's basically Bank of America acknowledging but these are banks. You try to hear banks and see how they come up with these price targets, and no one has straight answers or the same methodology at all. So. This is an interesting piece of research for Bitcoin people. Anyway, and I'm going to let you go. I got to take care of my pooches. Did you hear him scratching on my door just a moment ago?
Yeah.
That's my dogs wanting to eat this morning. That's how impatient they are. I mean, and this is a perfect example of is it the tail wagging the dog?
Yeah.
Right. I mean, that's it. Okay. Yeah. All right, guys. Hey, thank you so much for tuning in with me. I'm going to turn you over to Steve and Stelios. Thanks, guys.
Thank you, Blake.
Thank you, mate.
See you guys.
Okay, so in anticipation of the Fed, there's not much we can do actually, and the markets are not really. I mean, obviously the Nasdaq is a bit down today, but it's just reversing yesterday's gains. We're all waiting to see what's going to happen there. The only thing of interest to note, I guess, is in the eurozone. Ursula von der Leyen said today that she sees a third wave coming, a third COVID wave coming in Europe, and they're gonna put in special measures for vaccinations and this and that. So basically, they anticipate that this is not over yet, and we're gonna have another wave before summer, and summer, hopefully with the warm weather, it's going to subside again like last year, and then we start all over again. How does that feel, Steve?
Perfect.
But no, seriously though, with the vaccinations and all that, theoretically we should be doing a lot better when autumn comes. Famous last words, obviously, but I think it's going to be.
Speaking of which, I just learned yesterday that, lucky me,
Yeah.
I'm now in priority list for the vaccination since I got an
Well
embolism.
done. Well done. Okay.
Perhaps
Yeah.
you should consider getting one yourself, still.
Yeah, I'll pass on that.
You think so?
Yeah, otherwise not much to say. I mean, the yields are still creeping higher. 10 years 167 now, and obviously still not in a place, or at least the pace of this rise is not big enough to worry Jay Powell and Fed. But at some point, like we said before, they have to acknowledge it.
Even if they're worried, they would definitely not come out and say we're worried, because that's the last thing the market wants to hear.
That is true.
So I think before we even hear something remotely like that, they would, just start acting, always playing it cool, like, we're not worried, but we're going to be doing that or whatever, because the Fed has always is always of the opinion that it should never send like a negative signal to the markets. That's why they've never even
forecasted
a recession ever in their history.
Yeah,
which would make it kind of weird.
Yes. Anyway, but yeah, otherwise I don't have much else to say. We're in a holding pattern again until the Fed.
And your yields indeed still creeping higher. Let's see if this. I mean, in my opinion, there is a very high chance that today's Fed is going to be the catalyst to see how this gets resolved. Does it get resolved with a blowout move to the upside, which I think there is no real resistance until we get to 185? Or does it actually play out as an ascending wedge and we just, tank lower? But I do think there's a very, very good chance that this pattern has more or less run its course. And, later today, we're going to get an answer of what's, how this gets resolved, at least in the short to medium term. But I think that, if we see a breakout from this pattern today, there is a very good chance that there's going to be some follow through to it. So I do think that, there is a good chance that today's events following the Fed might be the beginning of like a move that's going to last for several days. Let's hope so, at least.
Yes.
Technically speaking, I think we're ready to get something going.
We've been ready for 2 years now.
In the grand scheme of things, yeah, I can't say that you're wrong in any way, but yeah, whatever.
I don't know. What else do people want us to look at? Was there something you had in mind, or do we look at any questions? St. Patrick's Day. Yes, it is today.
It is indeed. It is indeed. Now, I have no idea why that's significant in any way having to do with the markets, but whatever. Let's see. So, guys and girls, any questions? I mean, I don't really have something spectacular to mention today that we didn't mention yesterday and the day before, simply because the market is clearly coiling ahead of the Fed. So I think there is a lot of pent up energy here. Just look at crude, for example. It's been now what, 2, 4, 6, 7, 8 trading days that it's been consolidating, in a very tight range. You look at gold, it did rebound from a key confluence of supports, but as you see, the last few days it has stalled, below this horizontal resistance area at 1745, 1750. You look at more or less, any instrument, and we see the same thing. Even stocks. I mean, yes, they've been like creeping higher, but the last 3 days they haven't, in essence, done anything. And we probably see a little bit of a profit taking today ahead of the Fed. Some people that probably want to reduce exposure to the market. Nasdaq, reacting more than the rest of the markets. We've already explained why that's the case. Technically speaking, though, this might easily be just like a bull flag that has broken out. Dow DAX looks better than anything else, and at the same time the Dow here having to do with the US indices. And we've said before how well correlated in any case the Dow with the DAX have historically been. So especially in the past, because the Dow was considered like the industrial index. It's more industrial heavy. The DAX by default has, a lot of industrial companies. So, that's the main reason why there has been this type of a correlation. Now the dollar has been consolidating, and the question that everybody is asking is this some type of a consolidation following this leg higher, and that should produce another leg higher, or have we already seen the reversal and this is a consolidation before we continue to the downside? And really, from a technical perspective, just by looking at this chart, both interpretations are equally acceptable as a possibility. So I really have no clue. I mean, the overall trend is lower, and I think that won't change. Even if this short-term consolidation gets resolved to the upside, I'm just going to be looking for one more leg higher before we can actually continue lower. But as I said, there is also the possibility that we've topped out. So I'm hoping that today will be the catalyst for us to get more clarity, right? Until then, I'm just still holding on to my short USD NOK position, and I have no reason to get rid of it because here it is. There is a chance that this is another bearish consolidation. You can see it here, right? You can even see it as a rectangle. You can see it as a triangle. But in any case, as long as we trade like below 865 on a daily closing basis, I have no reason to get rid of it. It can end up being a reversal pattern, but it might as well be a consolidation before a continuation lower towards 8. And the same applies to anything else you look at this market. So I have nothing to add to that. As I said, hopefully after tonight actually, having to do with European hours, we're going to have a lot more to talk about and a lot more clarity to look into new trades starting tomorrow. Question about the euro yen. Yeah, I was explaining yesterday why I like Stelios's short in the euro yen, because we did hit a long-term descending trend line resistance, which you can see on the weekly, or even if you focus on the daily, I'm monitoring at this like ascending triangle, which we know we perfectly hit resistance and reversed lower. Now, having said that, from a risk-reward perspective, it's, especially since today we had a little bit of a rebound, it looks really nice against the highs we had the day before yesterday, because you can risk like, what is it, like 60 pips against the highs to look for a move at least towards this area, like 127.50. But you can also be looking at this ascending trend line support, this one with the intermittent trend line, and you can just like sell it if we break below it with a stop loss above the highs with a target of 127.50. That's what I think about euro yen. Now, as I was explaining yesterday, this trade is going to be helped a lot if this ascending wedge in the 10-year yields plays out, right? USD yen is very nicely correlated to it. So if we see a reversal from this ascending wedge and the move lower, USD yen should move to the downside, and that should really help the euro yen push lower. So in my opinion, be it equities, be it FX, if it's dollar denominated, or yen denominated, I think all eyes should be in the initial reaction from the yield side to the Fed today, because that's going to give us direction in almost all of the markets. Okay.
I agree with that.
These yields have been sucking Swiss and JPY funds towards the US treasuries, but might be stabilizing here. Yeah, Zach, if we find a high here, absolutely. Absolutely. How do you see GDX? Yes. My cat is a little bit. Okay, so this is how I see the GDX. I'm still monitoring at this flag. It's too long to be a flag, but in my opinion, that doesn't change the fact that it's a corrective formation. Exactly as gold, meaning there is a chance that we've already seen the low. There is a chance that there is more to go. And in cases like this, I wouldn't even be surprised to see an overthrow, because these are the moves that make market participants really get shaking out of good positions. You know what I mean? So I wouldn't be surprised to see this corrective channel break to the downside. People just getting rid of their positions, turning very, very bearish, and then whoop, big reversal, and up and up we go. So my opinion doesn't change. I consider this to be a corrective move lower. I'm not sure if we've seen the low yet. As simple as that. I'm going to be very confident that we've seen the low once we break above this trend line resistance. I'm going to have very high confidence that we've already seen the low. Until that happens, I'm also going to be fairly confident we've seen the low if we see a dump lower and then like a big daily reversal. That's also going to make me like very confident that probably that was the low. If we see like a big daily reversal day after seeing a false breakdown, that's also going to make me very, very confident. So either of those two events will get me very, very bullish even in the short term. Until that happens, I can't be certain that we've seen the low. I'm pretty certain that we haven't seen the high. I can tell you that much. I'm pretty certain that the high is far away from where we are.
Somebody's asking natural gas as well.
Yeah, absolutely. So natural gas still is creeping lower, actually. Let me find the market. There it is. So it's still creeping lower. Look where we found support for the time being, exactly at the confluence of the 50% fib and 200 DMA at 245. If you remember, I had mentioned when we were consolidating these losses over there, I mentioned that it's very likely to see another push lower, and I said that 245 is a key confluence of supports. This seems to be holding for the time being. Listen, I have the same opinion for natural gas as anything with intrinsic value, meaning I believe that this move lower is corrective. Now, I don't have the same confidence I have in gold or the gold miners, for example, right? So, between the two, my confidence is much higher in gold and gold miners. But, I think that 245 is a, very nice support area. There's no question about it. If we break through it, then the next area of support is at 223. Also a very nice confluence of supports. I do think that we're headed higher, and I do think that we're going to end up seeing higher prices than the 340, 339 that was the high at the end of October. And, this move lower doesn't look impulsive to me in any way. Let me see if we have any other questions. Yeah, we covered that. Natural gas we did. Okay, so thank you guys and girls, and we'll see you again tomorrow.
Thank you, Steve. Thank you, everybody.
Have a nice and safe trading today. And as I said before, let's hope that the Fed is once again the catalyst to get some volatility, because volatility is needed to get direction. When you don't have liquidity in the markets, and when you don't have volatility, even technical formations are almost always consolidations, right? And that's the worst type of environment we traders want. So But I'm optimistic, not because I'm an optimist, because I think there is a good chance that we get something happening today. So, let's hope that's the case. Bye-bye. Bye, Stel.
Bye-bye.